Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complaint, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kak Aini, Maru, Amay.
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja diam-diam tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that the lotus
Doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty,
untouched
touched by what tries to hold it down.
It is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that is the story of this young woman's small tailor shop that has been quietly helping hundreds of women piece their lives together again.
Morning all. Welcome back to Monica Byte 8. Aiman here. Alright, so if you look at the S&P 500, it finished lower on Thursday's session, breaking the two-day sideways movement, right? I think the index now closed at 6,832 points, which went down by 1.57%. So I think the market is trading anxiously, as traders aggressively reduce the risk ahead of CPI inflation report due Friday morning in the US. So you see, with the bond yield number to 4.1%, look at the today's price action, looks like the defensive um move, right? As traders worry about the hot inflation number could force the Fed to delay the rate cuts further, right? So I think for now, the tech stocks led the sell-off as the yield could hurt the valuation. So expect I would say more volatility in the next session as the market direction now depending entirely on the CPI data. So let's take a look if these 6,800 support to hold in the coming session. Right, so for the China A50 futures, it finished lower on Thursday, giving up the gains from the previous session. So the index closed at 14,882 points, which went down by 0.43%. And I think the market is now trading defensively, as investors aggressively or more cashing out the position to secure the liquidity ahead of the Chinese New Year next week, right? So with the recent China CPI inflation falling to just 0.2% on the, if you remember, data released yesterday, right? So today's price action, yesterday's price action confirms that the deflation fear is still haunting the market, potentially could overpowering any optimism from the US rally, right? So together with that, instead funds were seen selling the banks, consumer uh, stocks as well to reduce risk before the long break. So for this A50 futures, expect a thin volume and quite a weak fluctuation in the coming session or today's session, at least as it as it is the final trading day for this week, right? So for the WTI crude oil future as well, it finished lower, significantly lower on yesterday's session. Um, uh, I mean, joining the broad market sell-off. So this contract or commodity closed at somewhere around $62.90 level per barrel, which went down, let's say, around 3.07% yesterday. So look at the oil market, right? I think I believe that the market overall is trading quite I would say expensive, right? With the crucial US CPI due Friday morning in US. Today's price action also looks like a liquidation. Investors are cashing out of the risky asset to sit on the sidelines. Reports. Reports on raising U.S. crude inventory finally caught up with the price as well, overpowering the geopolitical worries. So, for this oil market, right, expect a volatile session today, as the market direction now hinges entirely for the U.S. Inflation data. So for now we still keep our bullish or positive trading buys and change, targeting for this 6.8 and also 70 resistance level, as the price right now is only could potentially rebound from this 200-day moving average. So if you look at our Malaysia market or the local market, right? So the KLCI, the FBM KLCI finished just slightly lower on Thursday's session, even though the KLI managed to gain slightly higher, right? So I think the index now closed at 1750.85 points, which went down by 0.32%. So the market now is again um riding on the global movement, right? So the market is trading again defensive modes as the investors continue to lock in a profit on the banking and plantation stocks to clear their books before the Chinese New Year holiday, right? So I think with the volume thinning out, the price action looks like a normal or typical pre-holiday adjustment rather than a bearish shift. So I think while our index lagged, right? So the future market, the FKLI market, was likely supported by the record-breaking rally in the regional market, right? Also driven by the strong tech demand, right? Also expect a range bound and a quiet session for today. A little bit, but at least to see some sideways in the market, as traders to stay on the sideline. So I think a bit of cautious finish for Bursa Malaysia yesterday. You know, the benchmark index, this index I mentioned just now, slipped slightly by 0.32%. Which largely due to the investors locking in gains. So also, despite some selling pressure in the Maybank, you can see CIMB right here. So there were also some bright spots in the energy sector as well, which managed to hold into some modest gains, right? So interestingly, see the spotlight yesterday was on the smaller names like the Zetrix, previously was Maiji, and also Kimik, which is the newly listed IPO companies, which also seeing massive trading volume. So I think overall market is still a bit of wait and see mode, wait and see approach, but with the index holding above this around 1750 level, I think the underlying sentiment remains stable at this juncture, right? So yeah, this is our watch list. Maybe you can take a look at the energy sector also, right? And for our Malaysia trading stocks for today, we have Dialog, right? So the stock is on its breakout formation higher at 175 cent level on the strong volumes, and with that we expect the momentum to keep bullish and so able to propel higher towards 180 cent level, followed by 195 cent level. So if the stock to clear down below 165 cent support, you can see that it could reverse the trend lower. Also next we have Cheating Holdings. So the stock is experiencing a breakout as well at this 70 cent level, right? So if the stock remain bullish, we expect the price to reach somewhere around 76 cent level together with the 82 cent level in the coming session. So keep an eye at the 64 cent level for any attempt of reversal. And lastly, for our FCPO, will finish lower on yesterday's session, extending the losses for few straight sessions. You see the benchmark contract or the commodity closed lower at 4037 ringgit per ton, which went down by 0.59%. So I think the market is still trading under pressure on the the stronger ringgit, I would say, right? So with that, the export data also showing a slight drop. So I think the price action for this week, right, or at least for yesterday, right, looks like a continued liquidation on demand fears. So yeah, I expect the market to test this 4,000 ringgit psychological level support in the coming session. As the bearish trend remains dominant, right? So I'll stop here and pass the floor to Jeff. Thanks, everyone.
Okay, morning all. We have a Maxis results note. This is the full year of 25. Core earnings at 1.6 billion, up 12% year on year. Basically meeting our expectations and as well as consensus, about 99 to 101% in terms of the overall number. As expected, I think we've seen that seasonally higher device cost eat into core earnings. There's also higher depreciation charges from the change in useful life of an asset, which is non-cash in nature. EBITDA margins basically hit a new high, although it was down sequentially due to the seasonally higher device costs. There were also some reversals in terms of staff costs for the quarter. Overall, full year EBITDA expanded 5%, in line with guidance of mid-single-digit growth previously. They've also declared a final interim dividend of 4 cents with a one-off 1.5 cents, which brings cumulative DPS to about 17.5 cents. The payout ratio is about 88%. Mobile revenues basically fell a little bit, a marginal 0.6%. This is basically due to the change in revenue recognition for a device care program that came into place the first quarter of last year. Also, lower interconnect rates as a whole. So if I exclude the impact of these two items, mobile revenues were up single digit versus that of Celcom DG, which reported about 1.5% growth sequentially. The number for Maxis is 2% up sequentially, and that's really being driven by higher roaming revenues this part of the year where people are traveling quite a bit. Telcos usually see a pickup in terms of roaming. Enterprise revenue also did fairly well, strong 6% quarter-on-quarter growth, and this is basically coming from project deliveries, stronger project deliveries towards the final year, towards the later part of the year last year, as well as home fiber revenues, basically holding pretty steady there. Okay, at the call, they've guided for a capex intensity of about 10 to 12%, so that's up from about 9% last year. Basically looking at accelerating fiber deployment to capitalize on the increased connectivity needs from data centers. So far, Maxis has connected about 47 DCs to date. This is basically point-to-point fiber. They've also sold some dark fiber, privately circuits and all. We also note that they were recently appointed the preferred infrastructure partner for the rollout of 4G and 5G across the ECRL, the East Coast Rail Link. That project is 665 kilometers, and it's something that they will have to undertake over the next 10 years. So rolling out 4G and 5G mobile connectivity, and I think they will have access to some fiber deployment across the link as well. So stay tuned in terms of the project. Overall earnings in terms of 26, 27 numbers, we've reduced it slightly by 1 to 2%. This is mainly to factor in incrementally higher 5G wholesale costs. That's the amount they're paying to DNB. Under the initial reference access offer, that agreement, it was about 280 to about 320 million. So far, they've only paid about 135 million last year. So this number will definitely go up this year with higher capacity on 5G and DNB having commissioned more capacity as well. Target price actually dropped slightly to 420 from 425. We are keeping a neutral call on the stock. I think concerns are really on the yet to be inked shareholding structure. The put option with MOF it's due for completion. Was supposed to be completed early part of this month, but still hanging on the balance. no particular updates there, but I guess the parties are still in discussions on how to restructure some of the internal agreements that the MB has. So it's something that we will have to monitor very, very closely. Yeah, so maintaining a neutral call with a 2% ESG premium, factored into our TP. Okay, I'll stop here and I'll pass you on to the next speaker.
Okay, thanks, Jeff. Morning, everyone. Let me continue with results note on SKP Resources. We are downgrading the stock to neutral from buy with a lower target price of 52 cents. So essentially, this is SKP's 9-month FY26 results. Their year-end is March, and the results were below expectation, given the weaker than expected profit margin and the anticipation of even slower top-line momentum going forward into fourth quarter. If we look at numbers, FY 9-month 26 sales fell 8% on cautious customer demand, given the prevailing market challenges, and hence we saw the lower utilization rates and aggressive cost down requests by key customer, pushing the 9-month gross margin even further down from the low base in the previous year that was dragged down by initial startup costs in relation to new production lines. And hence we saw net profit dipping 20% year on year to 71 million in the 9 months. Going forward, as mentioned, top line momentum should slow in fourth quarter, considering the lackluster customer demand and fewer working days in the quarter. And that should lead to more margin pressures from the depressed margin that we saw this quarter at 3.5%. And looking beyond the immediate term, while we expect top line to resume growth underpinned by new production lines secured that are commissioning later in FY27 and potential new orders that we have penciled in, the upside will be negated by the impact of cost down. Hence, we are expecting a negative earnings growth in FY27, and as we also expect the existing orders to reduce in view of the market, in view of the unfavorable market conditions. So post results, we cut our numbers by between 18 to 42%, and we cut our target price quite significantly as well to 52 cents, and we downgrade the stock to neutral from buy. That's it from us for today. Thank you so much for joining us this morning. Happy trading, and we'll see you in the next morning kappa at 8. Thank you.